Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I am Cody. He is Andy. Together we make up the Tech Talk duo. And today it is Wednesday morning, the 5th of November. Just about 10:30 Eastern Time, 9:30 Central Time. How you doing?
You know what? If I was any better, Cody, it'd be you. And
was
it was good to
mouthful.
see you were in town last week in Chicago, and I noticed you had that jacket on. That's like, how long have you had that jacket for?
Dude, I've had this jacket for like 8 years, all right?
8 years? No way.
Listen,
8 years.
You and Spain Howard.
You've had that jacket forever.
Next time I come to town, I'll have a different wardrobe. I keep getting you making fun of for the same shirts, the same jacket. All right, I'll change.
You know, okay, so there was a guy on the trading floor. He wore the same pants, same shirt, and he bought his glasses at Goodwill. And I also think he ended up buying like one of the nicer places in Trump Tower when it opened at the same time.
See?
So I don't think there's anything wrong with wearing just, the same thing. I mean, he was eccentric. We would love to have him on the show. He was he did everything technical analysis, and he would actually handwrite his charts.
See? It's called being frugal, folks. Look it up.
Look it up. In the dictionary, see Cody's face in there. Look it up. All right, let's look up some charts. That's a nice little segue. We had so we have 3 charts today. 2 of them came at request from a specific individual, and our third and final, we always debate, is this 3 or is this 3?
I think this is the easier.
This is the easier?
This one gets lost.
Because there's that movie where it's like they get into trouble for doing this instead of this, or like this.
I've always done this.
Yeah, this. They're like, we want 3.
What 3?
We're doing this with 3 charts. We're doing 3
charts.
charts today. 2 of them came at request from a specific individual. We'll look at those 2 first. And then the third one came at request. We wrote down everyone because everyone's asking about this chart.
Yes.
So we're going to give it to you unabated. Let's go.
Here we go.
All right. So CME blocks. This thing, and I mean, it is just like Chop City.
Yeah.
Chop City.
Chop City. As we get closer to the end of the year here, Chop City.
As we get closer to the end of the year. And some people say it's going nowhere. Where are you going? Nowhere.
He ain't going nowhere. He's going nowhere. Where you going? Nowhere.
I don't know. Like, to me, what sticks out to me about this one is I just have a hard time ignoring the fact that it is making not 1, not 2, but 3 higher lows. Yeah. Lower highs.
Lower highs.
Yep. So we're doing this in the morning now. So it's like we're all jacked up.
We're all coffeeed up.
Yeah. All coffeeed up, ready to go. Cody's got his wardrobe on. Yeah. We keep making these consistently lower highs. While at the same time, we keep bumping up against the same price, basically 160, even yesterday.
Yeah.
Or not yesterday, earlier this week. This is a weekly, right? And so we keep kind of just touching this low, and 160 is just a number where the market just can't get through it. And even futures yesterday, let's see where they're at now. Right here right now, January cheese futures, it dipped below 160. There it is. It dipped below 160 for a hot minute yesterday, and then came right back up. So
what's interesting this morning is all of a sudden cheese in class 3 was higher, and now we're kind of settling ourselves back to unchanged in Jan, Feb, even close into March now.
Yeah. And so let me just zoom in on this bad boy here for a second. So right here, when you look at this candle in particular, there's a lot of circles and lines. There's a lot going on in this chart for basically going nowhere. This candle right here. So this was last week. It tried to break out of this big downtrend that we've been in, right? And failed to do so. I mean, that's a pretty clear sign of weakness. And then it was followed up by just a massive open lower on Monday. I think between this high right here of 182.5, or within 3 days, we gave back about close to 20 cents. If you include yesterday's low, which we didn't settle on, but still. So yeah, the premise of this is basically it's winding up for some sort of longer term, bigger move, right? When you have what is basically a descending triangle, right? The idea being you have a horizontal line, it keeps bumping up against it, and keeps putting in lower highs. That's like a prelude to us eventually when we do, let's assume when we break 160, then I think the next stop,
so it is
all this noise.
As it is Wednesday morning right now when we are recording this. Do you think we hit 160 by the end of this week and break through, or do we hit 160 by the end of this week, retrace back to $1.70, call it, stay within the wedge, and continue the wedge formation? I mean, just until probably the end of November.
I think the wedge lasts longer than what people expect.
Okay.
I think the wedge is going to last longer than what people expect. It's just my opinion. I
So
think we all
we're just gonna be
agree
range
that,
bound.
yeah, I think we all agree that the likely next stop is for us to break 160 and see what happens.
Mm-hmm.
Right? Because we just saw what happened when we tried to get over 180. I mean, no, you're not happening.
Yeah.
Get out of here. So yeah, I mean, this thing just it just fell on a bed like a rock. I mean, it was just ridiculous. There's no volume too. I mean, it was just like boom. So yeah, I think like the likelihood is that we get through once. It's just a question of when, right? We've got the holidays going on right now. Football is kind of in full swing. So there's some seasonal demand aspects. You never really want to count out Super Bowl as something at these price points, right? If we were at like $2, it would be a lot harder to promote. But we are seeing some of like Domino's, for example, they released some earnings where their sales are doing a little bit better than expected.
Yep.
So there are kind of reasons for this market to kind of continue to, I guess, kind of peter along in this wedge. But I ultimately think, especially as you get towards like past like Christmas stuff, so let's just say like D's 15th, that you're starting to lose some more of that like seasonal bid. I think it's then is when you just kind of like, it's time to roll over. You get into a period where people are going to want to start actually building inventory. I think that's in this price point. I think the big question is going to be, what does NAS, or I call it NAS, NDPSR do?
Correct. Yeah.
Right.
So far, the premiums have been pretty healthy in the NDPSR.
Well, it seems like it's basically kind of tracking 170.
Yep.
Right. I mean, it's struggled to get below the coffee cup. It's struggling to get below 170, but it's, despite, I think we had a week where it was like, 161 half all week, basically on the CME, more or less, and it prints 170. Yeah. So that's going to be the big tell, is when you start to see that basis weaken. I think that's really what you want to be mindful of too, is, we get a week at the CME where it's 162 all week, 163, and it prints like 165, barely premium. Right. So I think it's a huge tell. But yeah, I think once you crack through this, it could be a quick trip to this W here.
I would agree with you. Now the question is just when do we do it? Because if we bounce off 160 again, that's going to be 1, 2, 3, 4, almost 5 times this year that we've done that, 4 or 5 times. I mean, that's when it becomes a price point of, I think you said it before, different charts of when you do break through that, it's a quick acceleration. Now we're not just like, range bound in here. It's a quick acceleration.
We're going to go find the next price point.
Bingo.
I think something to be mindful of is, we've seen this happen in the past before, where it's like there's this big buildup to a big break, and I feel like it's been building up for a while. Does the market get overly short in the futures? And if you run into, let's say, like promotional activity, we get competitive in exports again. I think you start to struggle to find new sellers in the futures. Let's say like low 150s. I think that's something, as Rice would say, we'll cross that bridge when we get there.
There you go.
God, he loved that saying. I bet he still does.
I bet he does.
All right, so moving right along. Iowa Dan also asked for butter. Great chart. I mean, this is you right here.
This is
this hasn't moved. Like, I haven't touched this, and I haven't since you said 140.
People laughed at me. People wanted me tarred and feathered, and you know what?
Laughed.
I took it.
Laughed. I could have. You had on like your Ring camera, like the people with the pitchforks and like fire and stuff like that, and torches. And
there's no way we go to $1.40 butter.
Can't happen. Won't happen. Guess
10
what?
cents away.
We get rid of this. We have filled this gap right here.
We have.
That bad boy is filled. And if you're wondering which one I'm talking about, it's this one right here. This one that was made in 2021. That thing is filled. So the next one to get filled is this 140 number. And my gosh, what a sign of weakness here this week so far. It's only Wednesday, and we haven't had cash yet. So we've only had 2 sessions this week. So this is what the chart looks like Wednesday pre-cash. This just looks really nasty. I mean, we started to have a lot of volume, and the market is churning, no pun intended, through all that volume, and still is continuing to break.
Mm-hmm.
So yeah, this looks, I mean,
I hate to say it. I'm not
Yikes.
saying we're going to be there today, but yesterday we were down, what, 7.75,
Something
7.5
like
cents?
that. Yeah.
I mean, we could be at $1.40 by Friday afternoon. We are right now an hour and a half away from cash.
Yeah. What a wake up call that would be. So yeah, I mean, to me, it's like, I think you got to go test this. You said this. We should go back and find like the timestamp of the day that you said that.
It was a while ago.
It was a while ago.
It was a while.
I don't really think there's anything else to talk about here. I mean, it looks so weak.
Very weak.
And the market clearly still hasn't found a price point where we're going to consolidate and try to make like a U. You know, I've had people ask me like, when do you start buying butter? And I'm like, well, I mean, when it stops going down, right? Like that's,
What,
I mean, to
what
me,
have you always called that? Trying to catch the falling
yeah,
knife.
catching the falling knife, right? You get bloody, but also like, how do you get a market to go up? You got to get it to stop going down first, right? And so far, this thing just continues to stair step itself down. I think if you're looking for a spot to say, okay, now's the time I want to take a shot at owning it, I think you got to find something like this. Let me just go back. This guy right here. I think at some point we're going to see this, where you make a higher low. I said it right this time. And all of a sudden it's at a price point where it's kind of like, yeah, we're all cleaned up. And maybe it's new crop season, which doesn't start till March 1. But I think you got to wait to see something like that play out in the chart. Because so far, like, you're catching a falling knife. You've been getting bloody, awfully bloody. And the chart continues to tell you that we've got more weakness. As crazy as it sounds, more weakness. Moss weakness. Moss weakness. All right. Speaking of potential moss weakness, let's do this. This one came. So we said this, like the chart that's been coming at requests from everyone.
Good. Are we limit down already?
Is it limit? 9.25. Yeah, limit.
Wow. Yep. Yes,
See
we
ya.
are. Okay. We're an
That
hour into trading feeder cattle and we are limit down.
So this is the March contract. We just picked March. Everybody, the general question is, what do you think of feeders? So we just grabbed the March contract. So I did a little mathematicus, a little math before we started recording, and from this high of 381, I think like the weekly high was 381, and that includes like a preceding contract, but let's just use it. 381 to the last traded price has taken the equivalent in milk about $13.50 per hundredweight off the market.
And
so put it another way, it's like and it did it in like what? So this is the 16th. So call it 2.5 weeks. 2.5 weeks. So in 2.5 weeks ago, it would be like if milk was trading at $20. 2.5 weeks later, milk is trading at $6.50. That's the equivalent move. It's
crazy. That is crazy.
It's crazy. It is crazy. And there's so much more potential for it to go down.
Right. Well, yeah, if you look at it on a monthly, I mean, we are still into like some record high numbers, right? If you look at it on a long-term,
let's look at a monthly real fast.
Stretch.
Oh yeah.
But
you and I drew this bad boy a while ago.
Yep.
So that's a clear higher low. Took off. You could, this could be like an inverted V bottom. A house or something. I don't know what you want to call it, but basically it comes, takes off. You have the exhaustion and then comes back down. And I think this 265 area is a number that people want to be really mindful of. It seems like there's a lot of headline risk. You had, what did Trump say, that he wants to get beef prices down? You're talking about opening the Mexican border.
Right.
There was a deal with Argentina, but all in all, that really wasn't that big of a deal, right?
Yeah,
like it
wasn't a whole lot.
Obviously though, the president coming out and saying like these prices are too high. So what's really interesting about this one is that you had what I think is a classic breakaway gap right there. So we've talked about it before. Not all gaps are meant to be filled. And in this case, a breakaway gap, it's defined as when you have some sort of like large event that takes place after a significant trend that just changes a trend on a dime. And it's usually news related. You see them a lot in stocks where it's like there's, companies doing super poorly or something like that. All of a sudden they have this earnings report that knocks it out of the, they just kill it. And you have the market doesn't wait. It gets after it immediately. So you have this big gap in the opposite direction of the trend. So I think this is a breakaway gap, which indicates it's the start of a new trend. This right here, I think you could, especially now that we're limit, I think you could say is a bear flag. So a bear flag is basically when you have a big break, it kind of like inches itself higher for a smidge and then comes right back down. If that is the case, then the measurement you'd want to really take depends on where, I think, like, oops, wrong one. The measurement you'd want to take, I think it's this one. There we go. Really, the measurement you'd want to take is from where it started to break down from, which I think you could argue is right here, right? So it gets to here. So then you just literally lay that right back on top.
Yeesh.
The next kind of like, I guess, technical like target to where I expect you'd start to run to some consolidation is pretty close to 300.
Right.
Which I assume 300 will be this like, number. It's like $20 milk or something like that. Nobody wants to sell it at $19.99. Everybody wants to sell it at $20.
Right. Correct.
So I think you'll probably run into some traffic at 300. But either way, like if you take the measurement, if this is a true bear flag, which I think it is, the measurement would be down to here. Which then, let's do this. So remember that number, 294. That still only takes you to here.
Yeah.
There'd still be room to go.
I mean, it's a huge break on the daily, but when you look at it in the long term on the monthly, it's not. I mean, it's not massive.
This is a weekly. I mean, it's basically it's just a elongated version of the monthly.
I think it's interesting that I got it pulled up on mine. I got the momentum in the RSI, and the momentum is obviously, a straight dagger down. The RSI is starting to cross into oversold territory as of today.
We've seen that before.
We have.
But remember, that's a great like indicator of like, hey, things could be slowing down. But you want like you wouldn't act on that until it comes back out of it.
Through it, right? Yep.
Right. You can. Let me see if I can pull it up on mine real fast.
I mean, we had that. It did the same thing on the 28th. So just a week ago, where it crossed over and oversold. In the next 4 days, it was nothing but higher. And then the past 2 trading sessions, yesterday and today, we've broken extremely hard again.
Okay. So here's what's interesting about this. I just pulled up RSI.
Yep.
And you've got the hot hand right now. And like they always say on the trading floor, always ride a hot hand.
Mm-hmm.
So we broke through it, came back in, and then you started making this this bear flag, right? And then now you're approaching it again. You could run into a time when, look at this. Remember this?
Yep.
It feels like it's going to go and do that while it goes and chases this $300.
You're saying the RSI is going to kind of shift its metrics with the chart.
Just kind of cruise along oversold, I think, until you get into this area right here. And then maybe we see another one of these.
Okay.
Who knows? But this is, I mean, what a great breakaway gap. I think that it's like a market of a lifetime.
Yeah.
We may never see this again in our lives.
Right.
So, but yeah, jeez. So
just to be fair, usually a breakaway gap is not one that is gone to be filled again, right? It's
correct.
That's it. The gap is it.
Yeah. In this case, we talk a lot about gaps being like unfinished business, right?
Mm-hmm.
You go and fill them. In this case, if it is a true breakaway gap, those typically don't get filled. It is usually the start of a brand new trend after a significant move. So, and let's just do this math real fast before we go. Divided by 20. So if we go to $300, basically, where we're talking about right around here, you're talking about another $4 a hundredweight in milk, right? And so you're talking about that would be $17.50 a hundredweight in class 3 equivalent if we go and trade around that 300 area.
Yeah.
In this contract, that in terms of the break.
Ouch.
Yeah. All right. On that note, that's all I got for today.
All right. Well, we appreciate Iowa Dan writing in, getting a hold of you for the 2 charts, and we appreciate literally everybody else that wanted to see feeders, which was, 25 plus people had already asked about it for the past week. If anyone has any charts for next week they like Andy and I to look at, please let us know. Give us a call, shoot us an email, send us a carrier pigeon. We don't really care as long as we get the request. We will take a peek at it and see what the chart says. With that, we still have the rest of Wednesday to work. We'll see what the charts do. We'll see what Spot does here for butter and blocks. and feeder already locked limit down. So we'll have to wait till tomorrow morning to really get another gauge on that one. But thank you everybody for tuning in. If you have not already, please punch that subscribe button, give us a thumbs up, tell all your friends and family about us. Always try to get more viewers as we go along, and we will see you next week on another episode of Tech Talk. Have a great week, everybody.
See you guys.